Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com and broadcasting to you from the Dallas KFXR 1190 AM Clear Channel studios. All right. Nick Santiago, President, CEO in the Money Stocks on the show with me. Nick, welcome back, buddy.
Great to be back, Michael. Thank you again for having me.
All right, my pleasure. Before we get into Apple and the rest of them, any news on the trading room today?
Another great day in the trading room, Michael. We knocked a half dozen trades out of the park. In fact, one of the trades that we did this morning was Best Buy at the open. We shorted the stock just about around $28, and now it's trading at $25.71. So great trading day. Great trading day.
Good.
Love the volatility in the morning. It was great.
Oh, that makes me so happy to hear that. All right, Al, you want to start the day off with Apple, right?
I did. I wanted to start off with Apple simply because stock's having a good day today. It's up about $10 at the moment, trading around $527 a share. But traders do not get in this equity. This equity is going downtown quickly. So, again, we're going to look for a shorting opportunity on Apple very, very soon, probably down to the $460 area. When it gets down there, that's when we're going to look to pick this one up. But right now, Apple ultimately should be setting up for a short setup probably in the next couple of weeks.
520 to 460?
Yes.
Ooh. Oh, what a move. Okay. All right. Got it. All right. And then let's see here. You wanted to talk about AT&T, the big T.
Yeah, I want to talk about AT&T. This stock really is something's happening here. They're losing a lot of market share or something. And I could care less about the story or the fundamentals behind it. But when I look at the chart, I'm coming up with a very, very good support level to buy the equity at around, ultimately around the $29 area. Now, I'll be putting out an alert on this when it gets there. Right now, the stock's trading at $32.22. When it gets down towards that $29 area, I have it penciled into the penny already. Come over to the trading room. I'll be putting that alert out. We will be looking to buy AT&T down around that level.
Now, I know that you work in time cycles, too. Is there anything that for that, or are we just working up a price on this one?
This one is going to be purely off a price, but it should have its own cycle, which would tell us we're probably looking at this happening within the next week or two.
Okay.
So it should happen relatively quickly.
Okay. Was it XT for the next one?
Yeah, the next one that I had on my list was CTRX.
CTRX, okay.
Yeah, that's Catamaran. This stock is getting hammered, absolutely slaughtered today. Traders do not step into this one whatsoever. It could get a bounce from time to time because of a short-term oversold condition, but it would just be a dead cat bounce at best. This stock should revert back down to $30. Around $30, that's where you could look at it. That's 15 points lower from where the stock is trading today. So I would not touch this one right now. If you get a bearish pattern over the next week or two, you can short it. The way where you want to cover or where you want to buy it is around $30.
Oh, wow. I wonder, because that's been around for a long time, Catamaran. I'm a Marine guy. I've been around for the boats for a long time, and for that thing to take a dump, something happened.
Yeah, something not too pretty is taking place here, and it has further downside to go. That's the best part about it. So I know a lot of traders think sometimes, hey, stock's down here at this level. It's down $7 today. I could pick it up. No. On this one, this stock where you want to pick it up would be around $30, and that's ultimately where this one should get to.
Okay, Phillips 66, excuse me.
Yeah, I want to talk about Phillips 66, which is a spinoff from ConocoPhillips, and this is an oil refinery stock. They're coming under heavy assault today. So all the oil refinery stocks are getting hammered. Phillips 66 is trading down about $2.13. I suppose that, well, I could tell you right now, that's about almost 3%. So level I'm watching for Phillips 66 in the short run is around $72. That's where the stock could have a little bit of a minor daily chart bounce. But the big level on this equity to own it, and you're going to want to own this stock because they make a lubricant for the in order to transport oil. This company makes the lubricant that will go into the pipelines. So when that Keystone pipeline gets approved, you're going to want to own this stock. And ultimately, I do think at some point this year that Keystone pipeline should get approved. But the level to own this is around $60.
Ooh.
Yeah, so short-term level around 72 on the daily chart. That's only good for about 3 to 5 trading days. After this, let that thing fall. You get to own it around $60. that'll be a great long-term hold.
Okay. All right. I take it you're expecting all of this to engage like now. You're not waiting for this to fall off a cliff later. These are things that are going on right this minute.
They are.
Okay. Yeah, I wanted to double check on that. All right. WNR, right?
Yeah, we have WNR. This is Western Refinery. This is another refinery stock in the same industry group. A level you could get in on this one would be around $30 a share. Don't touch it right now. The stock's selling off in a big way today. Short-term daily chart support level is going to be around 36. The stock could get a little minor bounce there, but I think it's going to be minor. The big level to own these refineries are going to be much, much lower prices. And this one, which is trading at $37.65 today, you could buy this probably within the next couple of months down to $30.
Okay. All right. Now we've gone through all of them. Talk to me about your take of where we are in the stock market right now. Say the S&Ps.
Yeah, right now, we had that January sell-off in mid-January all the way down to early February. The market seems to be somewhat in Jubilee mode at the moment. So what I'm thinking is happening right now, we're going to get either a minor retrace right now or we're going to go sideways for a bit and then make a new high. And then I think traders better be prepared because 2014, when the bear wakes up from hibernation, it could be ugly.
Okay, so don't start setting in your trading methodology for getting the entire portfolio geared for a longer-term short just yet.
No, there's going to be certain sectors that will start to fall first. Like we're already starting to see the refinery stocks come under distribution. You're going to start to see selective technology stocks come under distribution. Market's not after a 5-year run that we've had since March 2009. Markets just aren't going to roll over and play dead. It takes a lot to kill a bull. And 2014, while I ultimately believe it's a bearish year, the market's just not going to give it all up. So, again, we got long in this market on February 3rd, and now we've slowly been exiting all of our long positions. In fact, Bed Bath & Beyond was one that I picked up at $64, and I got out of yesterday at $68. So just an example how I'm scaling out of my long positions now, and then in due time, once I see the chart pattern form a little bit more, we'll start to inch into our short patterns.
How do you feel about, say, your classics, the metals, the interest rates, the financials, and things like that? Talk to me.
Well, I got to be honest, I like gold a lot right now. I like silver a lot right now. I think they're a little bit overbought, so they may need to consolidate a little bit before going higher. But both gold and silver, I think, are going to go higher from where they are today. So I actually like that class. I think that's going to be more of a safety play than anything else. But when I look at things like copper or stocks that, industrial type stocks like steel, you're going to have to be real, real careful there.
Okay. All right. Financials like J.P. Morgan, that has been a big barometer. Do you have any pricing targets on that?
I actually do. J.P. Morgan right now around the 55 level will be very good daily chart support. But ultimately, after that, we're going to have to watch for pattern. And if it breaks from that point on, JPM could test $50 again. This stock still is probably the strongest and the best of the financials that I could see, and that's why I really follow it so closely. But we'll know a lot more. Right now, the daily chart is showing support at 55, so we'll know a lot more in the next couple of weeks.
Okay, and like FedEx or the transportations, anything moving around over there for you?
Yeah, I'm glad you brought up FedEx because right now, FedEx, in my opinion, is starting to form bearish consolidation. So this is one I didn't bring up on your program, I don't believe yet, but this is one I am looking at as a potential short very soon. So I think FedEx probably needs a few more weeks of sideways action, but it is on my short list. And a level I like FedEx on the long side would be around 110. But I do think that FedEx is looking top heavy here.
At 133.
At 133, correct.
Wow. All right. We've got about a minute left. Any last takeaway messages before you give us contact information?
Well, this coming Saturday, my partner is holding a live event, a learning clinic called Keys to Unlimited Success. It's a great event, lasts about 4 to 5 hours. So if anybody's interested in that, come on over to the website. All the information will be on the website for that webinar. But that's a great learning clinic for everybody.
Okay, that sounds great. One more time with the web address so everybody can catch it.
Come on over to InTheMoneyStocks.com, and we offer a 7-day free trial, Michael, as you know, to our research center or to our intraday stock chat, where you'll get all of my morning setups.
Okay, great. Nick, thanks so much. We'll see you next week.
Thank you, Michael. Have a great day.
You too. Nick Santiago, President, CEO, InTheMoneyStocks.com.